Hello, everyone. My name's Di. I'm one of the Money Max guys. And in this series, we are learning how to bank like a bank. In our first episode, we talked about closed-end loans, mortgage amortization, and the fact that rate does not matter. I mean, who knew that we're paying more interest on our mortgage than on our very worst credit card? I'd always been taught that my mortgage, that was the cheapest money I'd ever borrow. In this episode, we are going to talk about interest cancellation. We're still referring to a $400,000 loan with a 6% rate amortized over 360 months or 30 years. And as you recall, that with a closed-end loan, we are required at minimum to make a full scheduled payment. So in month number one, let's do just that. We are going to pay $2,398.20 onto our mortgage. $398.20 goes towards principal. And yeah, $2,000 is going to go towards interest. But what if, in addition to this full scheduled payment, we were to decide to tack on, say, an extra $2,021.06? What's this going to do to our payoff? Well, logic would tell us if we've got $2,000 going towards interest and we pay an extra $2,000 in principal, we should cancel 1 month off of the back end of this loan. Well, friends, logic's wrong because principal and interest, they're connected. And anything we do to the principal, that affects the interest. So this single $2,021.06 principal accelerator, it doesn't cancel 1 month off of the back end of this loan, not even 2, 3, or 4 months. This single $2,021.06 principal accelerator actually cancels 5 months worth of interest off of the back end of this loan and saves almost $10,000. In any other arena, would you invest $2,000 to make 10? Of course you would. That is a very equitable arrangement. But what if we're not thinking big enough? What if instead of applying an extra $2,000, we applied an extra 5? And what if it didn't even have to be our money? What if we could use our lender's money? What if we could use our insurance company's money? Friends, stay tuned because in our next episodes, we are going to learn about offset accounts and how to cancel interest using somebody else's money.